What's up guys, welcome back to DCA. So what we're going to do in today's video is take a look at Chainlink. Now, a lot of people have been asking me, what is a good entry point into this asset? So I'm going to show you a metric today, which is very good at assessing potential support and resistance zones. And that metric is called the visible range volume profile, or the volume profile visible range. And this is essentially showing us where has the majority of the trading occurred for any given asset. Now, I want to show you just how strong this metric can be. So I'm going to start by playing a clip from back, this video is from about a year ago. And I'm showing you a video here where we were talking about the price of Chainlink, and we were talking about it when we were starting to, get down into like this $13 range. So the price was still up at around $13. And we were saying at the time that based on everything that's happening in this market and what's going on with the Fed, what's going on with the economy at the time, it's very likely that we will see ourselves head down to some of these lower levels. And I want to show you just how powerful this metric can be in order to determine what a good entry or exit price might be for any given asset. So let's take a look. Start to trend down. You're going to see the cryptocurrency asset class trend down. So let's take a look at where Chainlink may go to, where we might expect to find a large level of support as we trend down. Okay, so here we're looking at Chainlink, and this is, I know it's ugly, and I know it's not, it's so much easier to come on here and say, I could twist this data and tell you, oh, we're in this huge level of support right here. We're never going to go below this. We're, on the way up to 25 plus within the next 2 weeks. That's easy. Any channel can do that. But you know what? At the end of the day, we're here to have an understanding of both what the upside is, which we talked about in the fundamental analysis, and what the downside is. So when we take a look here, we're increasing the resolution of the data. And what we can see is there's essentially a few areas of support below us. So we're in this area right here, right at this $12 level. In fact, we could make this realistically right here. So this is a high volume node right here. But then notice that the volume trails off as you go lower and lower. So we don't get our next real volume level until we get down to about here, okay? So realistically, if we were to head down, you're looking potentially at $8.50 up down to around $7. So that's ultimately where I would be looking for support to form for the asset. And depending on how bad it gets, you really don't have a large level of volume until you get down to this $5 level. Okay, so you can see in that video how we essentially were able to identify exactly where a price may be good as an entry point into this asset. And we were saying, it's very likely that this $5 down to this, around $3.75 or whatever it may be at the time, that is very likely going to be a strong level of support for this asset. And that was simply by using this metric. I think, this is something that people could use in order to determine what might be a good price to get into the asset. However, you have to be patient. So when we're in a bear market, I said in this video, one of the things I talked about primarily in this prior video that, and again, this is about a year ago, over a year ago at this point, we said that it doesn't matter how bullish we are on Chainlink in the long term. Our long-term vision of Chainlink, the Link token, is irrelevant because when you are in a bear market, it doesn't matter how great the asset is. And we talked about Amazon, and we went back to the 2000 market cycle crash. And we said that Amazon, it was very clear that this was a phenomenal company, that, a lot of the things that they had coming down the pipeline, this is a great asset to hold. And nonetheless, Amazon went on a 90% plus sell-off. So even great assets with great fundamentals are going to get sold off in bear markets. So, when we were at $13 and we were saying that it's very possible that we head down to $5, a lot of people were in disbelief because, they'd heard prior videos that I'd made where we were talking about the future and talking about what the potential value for this asset was based on the future potential for Link. The future doesn't matter when you're in the middle of a bear market, especially in this asset class where, it's highly emotionally driven. And ultimately, when the DeFi market is getting hammered, we've talked about a lot on this channel how Chainlink is essentially the backbone of the DeFi market. So you have all of these things coming together, which were very indicative to us that we're probably going to lose a lot of these support levels. This metric is very good for that type of thing, but you have to keep it in perspective with relation to what's going on in the market at any given time. So before we go any further, let me just quickly explain what this metric is. The key point here, it's rather simple. The farther out this metric comes, so the farther out the metric comes on the horizontal axis, essentially that's telling you that is where the most trading has occurred. That is where, statistically speaking, you have the highest number of holders, because the more volume that occurs at any given level, the more likely it is that you have holders. And that's just a fundamental principle that, if more volume occurs at $1 than at $2, you very likely have more holders at the $1 level than you do at the $2 level. And just think about it this way. If we trade 100 shares at $1 and we only trade 2 shares at $2, and now the price is at $3, well, it's probably more likely that you have more shares that you're holding at $1 than you do at $2. Okay, so the principle is that simple. So this gives us a very good estimate for where large amounts of holders may exist. And therefore, we can extrapolate and say that support levels are likely to occur at these levels where we have a high number of holders. And, I've made many videos on this metric. If you still don't believe what I'm saying may or may not be true, going back and looking at some of these prior videos I've made on the topic, you can see how frequently that these support and resistance levels end up panning out exactly as we show them. And that's simply for the fact that, when you run into a large number of holders and you're on the way up, you're probably going to meet that as a resistance level. And when you run into a large number of holders on the way down, that's probably going to be a very strong support level. And that's just simply for the fact that long-term holders, people that have been holding for a year, 2 years, 3 years or more, these people are more likely to continue holding than people that have just recently bought within the last couple weeks or a couple months. And so, when you have a large number of holders down here at $5, that $3.50 up to $5 level, and then you come down to their price, well, those people are likely to say, hey, I didn't think I was actually going to get another chance to buy at this level, so I'm probably going to buy some more. The number one thing they're very unlikely to do anyway, and again, this is all probabilistic. We're talking about statistical probabilities here. Those people are at least likely to continue holding as you come down to their level. And so what happens is you kind of run into a supply shock, because if all of the coins being held at a particular level, people are buying them at their cost basis as you come back down to their cost basis, and they're not selling you any of their coins that they're holding at that level, you run into a simple supply and demand issue. And so when we come down to their cost basis here down at $5, where we have one of these higher zones here, that leads to a strong area of support. Okay, so simple terminology, these areas that kind of jut out where, they kind of look like, they form these Vs. These are called high volume nodes, the points of the Vs. These areas that sort of, where it looks like not a lot of volume was traded. So like $5.25, you can see barely any volume in that level. That is called a low volume node. So those levels tend to be areas where, there's not a lot of people holding the asset here. So basically from $6 all the way down to around $4.90, that area doesn't have a lot of holders. And so what you'll often see is when you get into those zones and there's a strong market current, either to the upside or to the downside, you'll blow right through those zones. All right. And that's kind of what we saw right here. That's why you have these two giant wicks right here. Okay, so when we went from around 650 all the way down to around 480, and then when we went from around $5 all the way up to 620, that's because there's no volume in this zone. It's a low volume node, and so we just shoot right through the zone. So that's the basic terminology and kind of the explanation for how we do this analysis. So with all that said, let's look at where we're at now. And let's just quickly talk about what may happen going forward based on where we're at and where we know that our support or resistance is at. So what we're going to do is start by just kind of getting this zone out of here. The bottom line is this. We have a fairly large zone of support still exists from $3.50 up to around $5. And so, that kind of panned out exactly as we talked about. And we said back in that video that if things kind of start looking bad, start getting ugly, expect us to head down here. And that's exactly what happened. We went down to this level, we hit that strong support zone that we marked out, and we bounced right off of it. Okay. So that still remains. Now, if things for some, unforeseen events occurred, things got terrible, yeah, you can imagine any number of events that could play out in the crypto market via regulation or whatever it may be. If all of those things played out, I would expect us to head back down to this level. With that said, things are looking better in the market right now, but if things got ugly, we could head down to this level. Now, if things got really ugly, which I think we would have a really tough time getting below 350, but if things got horrendous, then you have another massive support zone down at around $3. Okay, from $3 down to around $1.50. Personally, I don't anticipate us ever contesting that zone again with Chainlink. All right, so what I want to look at now is, kind of an answer to the question of where might we see, or what's a good entry price into this asset. So it depends on, realistically, what you think about the market right now. So if you think that we're totally out of the woods and you think that it's very likely that we kind of break out from here and we're at the start of a bull market, then let me say this level that we're at right now, so this level from around $6 up to around $8, that level is a support zone. So if you think that we're out of the woods and there's nothing to worry about from here, this zone is a strong support zone. We've been bouncing around in this area all through 2022, basically for the last year. We have been in a very confined zone almost for a year now. There's been a fair amount of volume, but you'll notice there hasn't been, this level for us to have spent an entire year in this zone, and this is all the volume that we've accumulated. It shows you that there hasn't been a huge amount of interest in Chainlink in the bear market. And that's for all the reasons that we've discussed, all of the fundamental reasons that we've discussed about Chainlink. It's not a retail coin, right? The retail investor has essentially no reason to be holding Link. So, they aren't interested in it. It's mostly a DeFi coin. The DeFi networks who need data services, they are the ones who need to acquire Chainlink. This has been essentially what we would expect. Pre-CCIP, this is what we would expect in the bear market that we just saw. This is used by DeFi networks in order to obtain data services. So when DeFi is getting hammered, and we know that, there's essentially no reason for the retail market to be holding this coin, then, this is the price action that you expect, where there was not a huge amount acquired during this time. Nonetheless, when you spend a full year at one particular level, you're going to acquire a certain amount of support. And that's what we've done. So this $7 level now is a fair level of support for us. All right. It's a fair level of support. So, if you think that CCIP is ultimately going to, in the short term, kind of drive the price forward, well, when you look above us, again, you do have some resistance. All right. So we have this known resistance, at around $8.50. And there's a fairly strong resistance level up at around $10. So you'll see that at 3 different points in 2022, we got rejected off of this level, right? So we got rejected there, here, and here. So each time we came up to this level, we got firmly rejected, and you'll notice that we got rejected hard in each case, right? So going from around $10 down to around 6 or so. Then from $10, within 3 weeks, we were down at 6 again. And then again, $10 all the way down to around $5.85. So that level has been tough to get through. Nonetheless, that level, not a lot of volume has been traded in that zone. So if we were coming up to that level with, any degree of momentum behind us, we're going to shoot right through that zone. Okay. We will shoot right through that zone. And then, once you get past that, then you start looking at this zone here. There is a fair bit of resistance in this around $12 up to around $13.15. Okay. So that is a level above us that you could be looking for. The question though is, where is a good level to obtain the asset at? Ultimately, if you think that CCIP is going to drive us forward and, that's all we needed to, push us forward into this market, this $7 level doesn't look too bad. I would potentially expect us to head down at least maybe one more test of the $6 level, especially if we don't just take off right now and head off to the races. So if we need some more time, I would say probably the $6 level seems like a fair level to acquire. Ultimately, if you believe in this asset in the long term, quibbling over whether you're getting it at $6 or $8 isn't the biggest deal in the world. But if you're trying to get a good entry point right now and you want to try and maximize your value, I think looking anywhere in this zone right here probably is going to play out for you. At the end of the day, if we need more time, if this market is going to continue to get ugly, then this level right here, I think certainly is going to act as a extremely strong level of support. I have a tough time believing that Chainlink ever goes below, at worst, probably around $4 ever again. But as we all know, the crypto market has a funny way of getting real ugly real fast. And so, having this type of metric in mind, all it does is arms you with an additional piece of information. So you'll know now if this market gets ugly and we head down to $6 and, we're sitting at $6 and some bad news comes out, you'll know right away where we're headed. We're heading right down to this level. We're going to shoot right through this basically $6 down to $5 level. We're going to shoot right through that. And where are we going to go? We're going to head down to this extremely strong support zone that we have right here. So to wrap it all up, basically we know that Chainlink, we aren't investing in Chainlink for the short term. We are investing in it because of its extremely strong fundamentals. What we need to do then is assess where is a good entry point. And what we can see is that a good entry point is very likely kind of in this zone that we're at right now. It seems like $7 is a strong support zone, but if things do start to look ugly, then you're very likely going to see us head down to $6. And like I said, if it gets worse than that, then you're going to see us right back down at this zone here. This is ultimately where I think that we kind of level off at in a worst case scenario. Now, if we're in a best case scenario and we just head off to the races right from here, well, then I think you need to see how we perform at this, $9.75, $10 level, because we have got firmly rejected off that level 3 separate times. Now, you have to remember the circumstances back then were different. So if the market momentum is strong, we're going to explode right through that level. And I think that's where you see us start to head back up to where we were making this video the first time. So we're kind of in the opposite situation right now. The market looks good and we're heading back up to $13 potentially. Back then we were sitting at $13, heading down to $5. So, if you've been diligent in acquiring during this time, I think ultimately you're going to be rewarded down the road. It's just a matter of how long it's going to take. So what this video does is it gives you a roadmap to gauge where we might see ourselves get stuck at if we head upwards in a positive momentum market, and where we might see ourselves catch our fall if the market starts to get ugly again. So that's going to be it for this one, guys. Until next time, as usual, see you.